Hi there, welcome to Hedera Wyckoff Weekly, and as usual we'll cover the Wyckoff stage, the key resistance and support levels, as well as any particular trends that we can notice on the chart. So let's begin. This is the weekly chart of Hedera, and these are the Wyckoff stages. If you have been following for like quite a bit of time, basically we are somewhere after the last point of supply. However, these are not representation of the end of a distribution cycle. So sometimes, even with LPSYs, again, I mentioned it many times, I see all these tags. If they're going up, it's basically another test of demand. So if there's sufficient demand, or if the macro environment gave enough support, obviously these can go higher, and that's why sometimes even after a couple of LPSYs, you can see an upward momentum that goes all the way to an upthrust or upthrust of the distribution. So back to the chart. Even though we're seeing around 5 to 6 weeks of drop, this is like a green cross, so it's like equal for bull and bear. However, it's still a downward trend. So as of this moment, we are still higher than this sign of weakness level. It was around 14 cents. Currently, it's half a cent more. So not too far, but not yet to that level. In terms of Wyckoff, that's pretty much it. So it all depends on whether it will return, the price will return to this long-term playground zone, the white box. So this box is basically an area or a trading range that covers a large part of Hedera from the past to now. So it's just a matter of time whether it's end of this month or next month. It will come down to test this support line, this white line over here, at around 13 cents roughly, depending on when it comes to this line, because for Hedera it's a slightly upward kind of long-term playground zone. So if you have seen my other live sessions, these boxes, depending on the particular crypto asset, or even stocks or other assets, they may not be straightly horizontal. They can go slightly upwards. I mean the long term, just the long term one, not the short term ones. Yeah? Short term ones can even go downwards. So key support levels, we mentioned one already, the white one. Key resistance obviously is still the yellow line that we've already seen a couple of days before. So this has been extended from this gap over here. Let me draw so it's easier for you to see. So it's right here. So this point and this sign of weakness area, and then here it confirms this resistance. So this level, it's around 21 cents. If there's good news coming out and this price does go beyond the yellow, the next resistance level would be the one coming from the automatic reaction that came down from the buying climax. So this one will be around 26 cents roughly, give and take. So those two are the key resistance level. We mentioned one here at 13 cents, this key support. The next obviously would be the bottom edge of the white box. That's roughly around 4 cents. Yeah, it's quite a big difference. It's only about less than 1/3, or like around 25% of where the price is now. If we look at the daily chart, yeah, if you have been in the previous sessions, this blue box, you must be very familiar. It's basically a downward trading zone or downward playground zone. If you're in the candlestick analysis, it's obviously a flag over here. So people say it's bullish, it may come out a little, but then here there's a key resistance level or intermediate resistance level before the key one at 21 cents. That's around 18 cents. This over here is already been tested once. Interesting is it's actually crossing the top edge of the blue box as well. So basically those 2 days, June 10th and 11th, confirmed both resistance levels. So one is the top edge of the blue box going down, and the other is the center line of this pink box over here. So this is the pink box I'm talking about. We also see the yellow line that we have already talked about from the weekly chart. So basically they are aligning to each other, the yellow and the top edge of this pink box. Currently the price is being traded within the lower half of the pink box. So one of the interesting thing is when the price, especially now, is getting nearer to the bottom edge of the pink box. However, it's not getting to the lower edge of the blue box yet. So look at these points, and this point over here. Whenever it gets close to the bottom edge of the blue box, there's a little bit of bounce. Currently, it seems there's still a little bit of room for it to develop. However, the pink is closer. So if today or tomorrow that it gets close to this level at around 13 cents 80 roughly, we'll see whether it will bounce up just like what happened in early April. So if it doesn't, if it continue to follow the slope of the blue box, then the pink line over here at around 13 cents 80 would become a resistance line eventually, because besides the pink line itself, when time goes on, if the price continue to go down, you see this blue box is crossing the top edge, is crossing the pink box, the bottom of the pink box as well. So if I change it to a line chart, let me adjust this so more tight to the peaks and valleys of the line. So switch back here. Okay, now it's even fitting in better. So we were talking about this. So this is crossing around middle of next month. So roughly 3 weeks from now. Is it? Yeah, 3 to 4 weeks from now. And well, obviously it can break out upwards or downwards earlier than that. So it will be critical for the coming 2 to 3 weeks to see how this evolves. Like I said, the pink first support, depending on when that happens, because the blue crosses the white over here as well. So if time goes on, if it lingers around here and breaks both, then the third would obviously be the bottom edge of the blue box in terms of support line. So the pink is at 13 cents 80, white is at around 13 cents. The blue obviously is trending downward. Depending on when the price hits it, it gets lower and lower. So that's pretty much it for Hedera. Thanks for joining me. I'll move on to Polkadot next. See you there.